All right. Well, I first of all, my apologies for not being there in person with y'all this morning. I had some situations come up that I just couldn't leave Baton Rouge for, but I want to thank Don, Jesse, and David for their willingness to accommodate this request virtually this morning, and really appreciate them helping me out. So I drew the topic of peanut consumption use in alternative markets. And like Jesse said, she had some good information in her previous presentation to y'all this morning. It's a lot to unpack, a big topic in a little bit of time. But what I want to focus on this morning for a little bit is talking about U.S. peanut consumption and use, and really how those factors impact the U.S. balance sheet for peanut and ultimately the relationships that those have on price. Then we'll explore some potential or some alternative markets for some non traditional uses of peanuts and talk about what that can mean in lowering our ending stocks, getting that stocks to use ratio a little bit tighter for the market that would be favorable to peanut prices going forward. But before I wanted to talk about a little bit of USDA data. The data that I have here is from the most recent completed crop year, but I wanted to unpack the supply situation for the U.S. peanut industry first. The U.S. peanut acreage, following the cues from the market, has really trended downward over the period 2020 to 2022. In 2022, we saw the peanut crop hit with tomato spotted wilt damage, and that caused the average yield to fall to 3,800 pounds per acre. In 2023, we saw harvested area come up to over 1.57, almost 1.6 million acres, which was a 6% increase in production that year. But since corn and cotton prices were not as profitable, growers planted peanuts in 2023. So as we go forward and what we can expect in 2024, USDA in their acreage report has planted acreage at 1.75 million and harvested acres at just north of 1.71 million acres. So from the supply side perspective, that's the production that we have that sits on the market. And I thought it would be interesting to at least go through the demand or our consumption side of the peanut balance sheet. This is a table from the World Ag Supply and Demand Estimates Report of the WASDE, and it categorizes the supply and use, or basically how much peanuts we have, how much peanuts we're going to use, and then how much we're going to be in with to have that carryover or that stocks to use ratio to get shellers through the off season until those peanuts come to market. But over the next couple slides, I wanted to really focus on that middle part of the table when we talk about crush, exports, and food use, but talk about exports a little while first. USDA estimates that peanut exports are up about 33% for the August through March period. Shipments are up 21%, which is good, but roughly 25 to 29, almost 30% of that peanut crop is exported to the largest markets being Mexico, Canada, Japan, the European Union. But when we go down on that balance sheet, I want to call your attention to the last three rows. That's going to be the ending stocks category, the stocks to use ratio, and the season average farm price, and that's an all peanut price per pound. The ending stocks, or that carry out, is lower than the historical levels that were observed in the market over the past 2 to almost 3 years. And that's been good for farmers because the lower the ending stocks, the lower that stocks to use ratio gets, we tend to see peanut prices respond favorably. So peanut prices are going to act inversely to the ending stocks and that stocks to use ratio. And that's going to be a point that we're going to revisit at the end of this presentation this morning. But first, when we talk about peanut yield, again, kind of jumping back to the supply side of the balance sheet. And I thought this quote was very appropriate for the talk. With larger crops comes the need to find new ways to put them to good use. Peanut yield has ebbed and flowed over time. This graph goes all the way back to the year 2000. That monster crop that the market saw in 2012 saw the highest average yield, over 4,200 pounds per acre. For the following 4 seasons, that average yield did drop a little bit. The average yield in 2017, we did see a rebound there, but then it declined again over the next 3 seasons. I talked about the 2022 virus causing the average yield to fall, but when we had that virus, we had that production decline, if you will, That was compounded by the fact that we had fewer peanut acres that year too. So it did send a signal to the market where supply actually started to ration demand and was a net positive for prices, if you want to think about it like that. But going back to that quote that's in the red there, finding new ways to put these peanuts to good use, whether that's increasing in volume, increasing in export sales, or finding non-traditional uses. I had the opportunity to join y'all last year in person at the meeting. Dr. Nino Brown talked about the peanut variety development program at the University of Georgia, breeding for higher oil content peanuts. The nutritional based focus that we see of some brands right now and some food companies, the opportunity for new research into non-traditional market uses, which we'll get into later, that the American Peanut Council, the National Peanut Board, has started to explore alternative uses in the poultry industry and the positives that can have with increased peanut consumption in feed and benefits for meat production, potential in the bioplastics area. Jesse mentioned that as well, and with the biofuel market too. So some of these bullet points we'll pick up on through the presentation, but just from a supply side perspective, when we see the overall trend of yields increasing over time, how do we find new ways to put these peanuts to use? I'm not going to unpack this graph. I think, I joked with Mr. Don when we went back and forth talking about this presentation over the past couple months. And I said, as any good economist, we have to throw a graph with a bunch of different colors, a bunch of lines, and a bunch of stuff going on, so we can earn our keep, so to speak. But when we look at the relationships that crush, peanut exports, food uses of peanuts, and ending stocks have, all of those are sending signals to the market, not only in the current marketing year, but also in the marketing year that's going to follow. The carry-out level, the tightness of the market, the slackness that's in the market, and ultimately how price responds. So if I had to put a graph or show y'all one graph and not talk about anything else, it'd be to unpack some of the components of this graph slide by slide, component by component, and talk about what that means from an economic perspective for you as a peanut producer, but also what it means for the research that the industry's doing, what it means for the promotion that the industry's doing, and finding new uses for peanuts. But one market indicator that has not fluctuated over time is going to be domestic consumption, which has risen steadily. The per capita consumption, that's going to be that light blue line at the top there. It's on that corresponding to the numbers on the right axis. The per capita consumption has increased to over 8 pounds per person. If you put peanut oil in there, that number jumps close to 10 pounds per person. A per capita consumption of peanuts in the U.S. is a good, true measure of the demand for peanuts that we have. And I think that's very relevant when you look to what consumers are doing at the grocery store. Consumers are looking to maximize the nutrient density and the affordability with peanuts. And the cost per gram of protein is about 2 cents for peanuts. That's the lowest compared to milk, eggs, beans, chicken breast, pork chops, and even when you get into some of the higher priced beef items like roast and ground beef, when that cost per gram of protein goes up to about 6 cents per gram there. So when we look at the food uses of peanuts, and this is what this graph does over the previous 10 years, it looks at where peanuts are going, and I've just broken that down by million pounds. Those cutout numbers and those bar charts are the pounds, and then we're just kind of stacking up percentage. But it's no surprise that peanut butter, very large component of food uses for peanuts, followed by snacks, followed by candy. But one factor when you look at some of the projections for the industry going forward, the University of Missouri, their Food and Ag Policy Research Center put out a report about 2 months ago. One factor that's concerning going forward over the next few years for peanuts is going to be a drop in domestic consumption. The utilization charts and data from USDA from those early estimates show about a 3% decline from where we are now. An 8-month comparison saw peanut use in candy down about 2%, snacks down over 10%, and peanut butter down anywhere from 1/3% to maybe 1/2%. But all of that is leading to that decline in peanut use in U.S. food uses, which is concerning. Now, we can combat that with saying, well, that situation wouldn't be totally unique to peanuts because of the impact that inflation is having on the consumer, which really has affected most all food ingredients now. The cost of those food ingredients have increased not only for consumers, but it's also increased for the manufacturers that are using peanuts as an ingredient in their manufacturing process. So when we look at where total peanut use is, and we're going to kind of combine domestic use of peanuts here and the export market. Domestic use is going to be the blue bar. The export use is the red bar there. What you see in that gray shaded area is going to be a projection to the year 2034. And I know that's a long way off when we make projections or anything else, but a few things are important to pick up from this chart. The U.S. has a relatively mature market domestically for peanuts, and I think that goes back to the following chart there. But again, with the yields increasing, with production and acreage increasing based off the cues that the corn and the cotton market is giving us with relative competability, relative profitability, how does the industry sell this increased production that we're going to have on the market? We did see a big increase in 2020, 2021, where we saw record high consumption as we moved through those COVID months because people were eating more at home. And that was a big part that drove that 2020, 2021 per capita consumption number up to 8 pounds per person. So again, an anomaly for the balance sheet because of that big supply shock to the market. But again, fundamentally, we don't see these market categories growing at a high rate. So it begs the question, can we have the opportunity to increase one, if not all of these categories in the traditional sense, while also starting to explore some of the new non-traditional uses of peanuts that may require a little bit of capital investment, research, technology, and ultimately time, so that these consumption patterns, this expected peanut use, can come to fruition on these new uses, which we'll talk about later on. Export demand for peanuts, one of the good things, if you recall from that balance sheet I showed you on the second or third slide of the presentation, the export demand that we have for U.S. peanuts now is helping tighten the supply before the 2024 crop gets harvested, before that crop gets warehoused. But more than 85% of our peanut exports are going to what the industry would dub a mature market. In the future, will the additional sales come from new product categories in these existing geographies or these existing markets? Would we see, for instance, growing peanut butter consumption in the European market? Would that grow to where the EU would want to import more peanuts? Or do we have new markets that develop altogether? Would that be an oil export market? Would that be an Indian market, a Southeast Asian import market for the U.S.? But one thing that I think, with peanuts or any other crop, exports spiked in 2020, and that change was caused by China. And it seems like China is having a large impact, not only in the peanut market, but on a lot of U.S. market for commodities. That change and that spike in exports that we saw in 2020 was caused by China's interest in that 2019 crop, which was plagued by weather-related aflatoxin issues, and it dropped U.S. quality. Now, China likes to buy lower valued peanuts for its crush industry, for its large peanut market oil industry. And when the U.S. produces a higher quality crop, well, China tends to kind of back out of our market for a little while because they are ultimately a price conscious buyer of what they want. When we kind of break this slide down a little bit, I won't go into a lot of detail, but when you look at some of the markets like Mexico, Canada, China, the Netherlands, we've seen a lot of product growth in some of these markets, and we've seen some of these market shares increase. But when we look at where the profile of our export market lies, when we look at where we're sending our peanut products to, and what type of peanut products these countries are buying, I think it speaks to the effort that the industry has sustained to not only secure our markets, and that was a point Jesse brought up earlier, but also finding and creating new markets for U.S. peanuts. The top two markets for peanut exports is about 54%. That's Mexico and Canada combined now. But one thing on this chart on the left here on this pie chart, it really speaks to the accomplishments of the American Peanut Council and what they're doing to increase exports to places like the Netherlands, which is up over 300%, triple-digit increase in exports, and the United Kingdom over 135%. And while these markets are smaller, we're seeing growth in sales and growth in total peanut kernels imported by Mexico. Even though that slowed a little bit, we're seeing the peanut butter consumption in Mexico really being an emerging market. We're seeing that market beginning to start to develop. Peanut butter also appears to be driving European, UK consumption of U.S. peanuts as well. But this cutout at the bottom here in purple, the strategy of the industry to grow these export markets about coming from, do we find new product categories in these markets, or do we find new markets altogether? Growing peanut butter exports, developing these new markets, accelerating consumption in certain markets while defending the U.S. markets that we already have, and of course, advocating science-based regulatory voices in terms of combating the allergy concerns associated with peanuts to some people in the market that may be price conscious on that side. So, as we go through food uses of peanuts, as we go through the peanut exports to certain markets, all of that plays into how much peanut stocks are going to be left after demand is met domestically and after that international demand is met through exports. Now, peanut ending stocks or a carryout is a very important market indicator. And I mentioned earlier that it's been trending downward over the last couple of years, and that's been a positive for the peanut grower. Remember, as those ending stocks get down, as our ending stocks as a percent of our production decline, it's usually favorable for prices. Now, the U.S. can manage and shell about 250,000 tons of peanuts each month, with the peanut marketing year beginning August 1st. Now, between August 1st and November 1st, peanut shellers rely on that carryover from the previous crop to keep those shelling facilities supplied. So the question for the market is, what is that balance that we need? What's the appropriate level of carryout that we need to see after we find these domestic usage relative to production? And 750,000 to 850,000 tons of ending stocks is a healthy and balanced market. That 2022 carryout is about 984,000 tons. The carryout from the 2018 year, just to go back and reference where we saw that big spike, was 1.36 million tons, which really tipped the supply balance really out of scale a little bit and really created a lot of peanuts for the market to eat through, no pun intended, because that was suppressing price at the time. While these markets were mature, while some of these emerging markets were still, the research was still going on, the markets were still being developed, there simply wasn't an avenue to move that stock off the market quickly so that price could respond accordingly. When we talk about prices, this is the runner peanut price here through last week, 26.9 cents a pound for the marketing year. The red line's the current marketing year. 22-23 was where we were prior to that. If you take the Peanut Grower magazine, you look at the market outlook columns there. Contract offers in the Southeast are 500 to 525 a ton for runners now. Buying points reported heavy action, especially at the sheller. If there was an option there, maybe peanut price is going to move up later in the year. All of that plays into price, right? And while it's difficult to say with certainty if we can move X amount of tons off of the market, X amount of pounds off of the market to reduce ending stocks, what effect does that have on price? And one of those metrics to evaluate that from an economic standpoint is looking at the relationship between price and ending stocks. Now, Anybody in economics will tell you this graph is not the gold star standard. There's so much variability with this. You got to take this with a grain of salt a little bit, but it does let you know. And I went all the way back to 1980 on this, so it's about 40 years of data here. But you can somehow compare years to other years that said, okay, well, if we had our ending stocks at 800,000 pounds, where could we expect price to go? And this is an indicator of just how important the consumption and the use are for the markets, but also what does the potential for new markets have so that these ending stocks can be reduced so that we can move, if you look at that x-axis, if we can move to the left there, so by reducing the level of ending stocks, typically that gives us a higher price per pound in the peanut market. Coming back to earlier, this is that supply and use table that the University of Missouri puts out. And this was a 10-year baseline. They do a lot of good work over there, very well respected in the industry. But one thing that we pull away from this as industry stakeholders is the relationship between ending stocks and farm price. And you could see that projections thus far indicate that prices are going to go down because of the increase in ending stocks that we're expected to see when we go into the 24-25 marketing year. Now, yes, larger acres and larger supplies does correlate to increased use because larger crops tend to give us a little bit of a supply cushion on the market. They tend to stabilize or even move prices down if demand stays the same at the status quo, but it also makes us competitive in the international markets as well. We're seeing this with corn and soybeans, cotton, and even rice right now and some other crops I work in. So even though we're seeing a decline in price, it does speak to the competitiveness that peanuts can have, but it is concerning the gradual buildup in ending stocks year after year after year. And it also tells us that we need to find alternative uses in the peanut market. So switching gears a little bit, and this is a graph that Adam Rabowitz at Auburn had done for the Southern Ad Today outlet, and talked about peanut cost of production. And I know you're going to have policy speakers at your conference talking about the implications of the Farm Bill and reference price support levels and everything. But if we take this graph and we put it in the context of finding new markets, producers are going to respond to market incentives or emerging markets that can possibly offer incentives to change their production practices. If I can draw on a parallel for a minute, if I can, we're seeing this in the Louisiana rice industry right now. Our production costs for rice in Louisiana have gone up tremendously. It's a flood irrigated crop. We grow a mix of conventional and hybrid rice varieties, but one of the rice mills received a climate smart grant from USDA, and that rice mill was interested in measuring and quantifying the carbon footprint of rice production in Louisiana. They've identified a set of metrics and a set of production practices that they'd like producers to follow. But they realize that this production practice could result in an increase in on-farm costs. So they are subsidizing certain categories of cost of production so that they can ensure that they're receiving rice produced in a certain way while compensating the producer for having to spend more money in a year of tighter margins. And I'll come back to that later on. But as producers are very conscientious of the volatility that their inputs have, can these new markets offer incentives to maybe lower the cost of production? Is a new market or the oil market or a particular variety going to come about that has changes in certain markets where producers can see a decrease in some of these consumption categories on their per acre cost, which would incentivize them to maybe devote a certain portion of their acreage to these markets? In Louisiana, we don't have a lot of peanut acres, but it is a crop that is growing in popularity. We have about 2,000 to 2,800 acres of peanuts in our state this year, and a majority of our costs are spent on chemical control and plants. Our peanuts like sandy soil. Our peanut producers are very few, but they're concentrated. But we can get about 2.5 to 3 tons per acre in yield when we grow our peanuts on a 3-year rotation: peanuts, corn, soybeans. And again, it's a crop that we're seeing a lot of interest in Louisiana because of where our competing corn and soybean prices are. So again, I want to introduce that concept of production cost and how that plays a big part in not only evaluating these new markets, but allowing the investors in these new markets to try to incentivize producers that need to maybe adopt a certain production practices or alter their production practice to make it financially worthwhile for the producers. So again, how does the industry shell another X tons of peanuts per year? It's a daunting question, being that our domestic markets for peanuts is mature. I think following the status quo, is not going to be 100% of the answer moving forward when we're looking to move more peanuts off of our market. Jesse brought that up as well. So I think now when we get to the alternative uses in the market and finding new uses for markets, right, how do we add value to the commodity, which is peanut, in different ways? Are we changing the commodity state or form? Are we making a product in a way that enhances the value of peanuts throughout that commodity's value chain? Are we separating an ag commodity, a product, from other commodities to enhance that value? Are we using that to create, farm-based renewable energy, which is so popular now? Jesse mentioned that earlier, right? We're finding new uses for agricultural byproducts. That goes to that first bullet points of how we find value and create value for peanut in different ways. We also have to understand that consumer demand, assessing the competition in the market. I'll talk in a minute about peanut oil in the renewable fuels or the biofuel sector. Who are the big boys on the block in terms of market share and competition there? From consumer demand as it relates to edible uses of peanuts, the industry is listening to the consumers. It's learning about potential demand. It has a network of businesses to maybe find new products or new labeling. And of course, market access and competibility. These alternative uses of the markets, the peanuts, they have to be able to compete, whether that's for shelf space or compete against other byproducts in certain industries. Just a little bit on peanuts. World production. Jesse talked about peanut production worldwide, about production, crush, and peanut oil production. And the world produces about 50 million tons of peanuts annually. Crush is about 20 million metric tons, less than 40% of production, and we produce about 6 million tons of oil every year. So if the U.S. produces about 5% of the world's peanuts, but we produce less than 2% of the world's oil. And for peanut oil to be a major part of the U.S. industry, we have to look at the economics of peanut oil production and look to see how that can work for our producers in the U.S. If peanut oil consumption is growing globally, can that be one market opportunity for us? I really like some work that the National Peanut Board, I talked to Dr. Lamb about sharing some of this work too, with making the economics of peanut oil work. When we look at this about, it can be difficult to consistently find markets for all the peanuts that we produce in the U.S. when we look at traditional uses like peanut butter and snacks, the edible parts. But how do we balance the production of edible peanuts, but also, say, highly oleic nuts or the oil nuts for the different markets that not only the U.S., but maybe the global market may be looking for? Can peanuts for crush to produce peanut oil and meal domestically and internationally be a viable option for our producers? So I've reproduced this graph looking at oil from peanuts with 60% oil content there. Work through some numbers when we look at 1,500 pounds of peanuts in kernel weight for farmer stock ton there. Looking at prices. 55 cents a pound for the edible kernel, 25 cents a pound for the oil stock, peanut hulls, oil, meal markets, and hulls, and comparing the two practices and identifying where some of those concerns may be of how peanuts can be competitive with straight shelling peanuts, bypassing shelling plants and going to specialized crush facilities. Peanuts for crush in the U.S. are a byproduct of the shelling process, where peanuts are shelled and then sorted for traditional edible uses. Peanuts to be crushed and shelled through high-speed, barn haulers and stuff. Can that be a viable option? Can we see some sort of integration there? Because we see a revenue difference, or when we look at the revenue stream, we do see a differential of about $157 right there per ton with the different methods for straight shelling versus straight crushing there when we look at the values and do sensitivity analysis there. But I think, this speaks to how can we look at the revenue stream for a farmer stock ton of peanuts when looking at identifying the opportunity for peanut, whether that's peanut oil through the value chain or looking at where future research needs to be done. And I think that lets us come to the concept of this circular economy for peanuts and new product developments to enhance the value chain. Circular economy replaces those linear models because it aims to either reduce, reuse, recycle, and recover materials in not only the production but also the consumption process of peanuts. So I think it can be a win-win from an economic standpoint and from a value chain perspective. Peanut processing industries generate a lot of underused products, the skin, the shells, the meal, which represent high economic potential to enhance the overall value of the peanut chain, particularly by exploring green technologies for the renewable or recovering those valuable substances out of that chain to divert or to include into new markets, especially, say, renewable fuels and things of that nature. Peanut shells is one that comes up. Peanuts are nature's zero waste plant. The meaning from the roots to the hulls, no part of that plant goes to waste. Each year, about 500,000 tons of peanut hulls are generated when the crop is shelled in the southeastern states alone. So among those peanut shells, among those physical characteristics, moisture content, bulk density tend to be the most important there. And I think it can create several opportunities. Several scientific studies are showing the potential application for peanut shells. With simple conversion, they can be converted into many bioproducts with commercial application, from biofuels to building materials to paper manufacturing, heavy metal absorption. It's a fibrous and a lignocellulosic structure on that, which does have appeal. It's also easy, accessible type of absorbent, both in terms of consumption and production. We're seeing that a lot, whether that's in woven fiber materials or absorption for things in the industrial sector there. So again, the natural composition of the peanut shell is one that does have very appealing properties, but one that I think the research is going to need to catch up so that the market can evaluate how much it costs to develop these byproducts so the market can establish a price for it. One thing that we do know something about is the potential uses of peanuts in animal feed. And I know the next speaker is going to go into a lot of detail on this. But when you look at the demand for animal feed in the U.S. from the Animal Feed Industry Association, the poultry market is estimated at about 60 million metric tons. It's followed by the beef sector and the hog sector in terms of how much it's using. And the broiler sector from 21 to 22 actually grew by 3.5%, when we actually saw the swine industry or the hog sector contract and very little growth in the beef sector there. Now, a big component of that is corn makes up more than half of the total amount of compound feed that's consumed in the U.S. When you combine that with soybean meal at 12%, DDGs at 11%, 75% of that feed tonnage is going to be consumed in those three categories. But reports show similar body weights in poultry studies that have been conducted with feed intake, egg weights, etc., between peanut-containing diets and both control diets implying effective utilization of whole and shell highly oleic peanuts and or the unblanched highly oleic peanuts as alternative layer feed ingredients at inclusion rates of anywhere between 4 to 8% in the industry. Peanut skins provide some antioxidant rich compounds with fat and fiber that the industry uses. So, using locally grown peanuts as a feed ingredient to the poultry needs in the industry could replace some of the imported corn and soybean meal that we have coming into the U.S. Peanuts could be a viable alternative to soybeans, which may be limited in their availability due to the supply side dynamics with soybeans and a lot of our soybean meal actually being exported right now. Um, Previous studies on peanut shells up to a 6% inclusion rates. Another study suggests 5% to enhance broiler performance there. But again, it comes back to the notion of how well can peanuts in the inclusion in, say, the poultry sector, how does that compete with existing feedstocks? This is some USDA data here from the Economic Research Service. I've went back over the previous 3 marketing years to show you the cost per ton of soybean meal, which is that blue line, 21% cornmeal at $200 a ton, 60% cornmeal noticeably higher, $622 a ton, the DDG price at $233, and then our cottonseed at $351. And you could see the ebbs and flows of that market over the past 3 years and identifying at which one of these could the peanut inclusion compete with some of these existing feedstocks in the animal feed sector on a cost competitive basis to be a viable option. And when we talk about moving more peanut stocks off of the market, and I think this can be a metric of, well, if the peanuts were sold by the ton, how much could we see? What price point would they need to be priced at to be competitive to get an X% inclusion rate? So again, it does speak back to when we find these emerging markets or these quote unquote non-traditional newer markets for peanuts, what price level would they have to come in at to be competitive that would allow that market share to grow over time? Another industry, is particularly in the Southeast, Arkansas, Mississippi, Louisiana, is the aquaculture diet. Large percent of the aquaculture diet is centered in soybean meal and cottonseed meal, similar to what we've already talked about there. How can the peanuts compete in with the existing diet competition and the existing makeup of these markets? It's not going to compete and take 10, 20, 30% away from some of these established shares, but it can establish a foothold in the market that, again, would allow those peanut stocks to draw down over time. Broiler diet consumption here. This is just a breakdown of where some of those feedstocks are coming from on a percentage basis. Majority of that is corn going into the broiler sector. So I think one of the hardest questions to answer with any certainty from an economic side of things is, well, what does that inclusion look like? When we look at just the profile on soybean meal, and let's assume here, and this is a lot of assumptions, ladies and gentlemen, built into this, but when we look at the soybean meal profile that's going into poultry feed rations, if we look at what a 1% inclusion could be if peanuts were to go in there and displace soybean meal by 1%, how many more tons would that mean when we look at the industry breakdown of where it's going? And it's about over 200,000 tons. And then when we scale that up, obviously, it's more and more. Now, that's, a hard number to pin down, but I think it gives us some indication of what those market shares may look like and the potential uses of peanuts that can particularly provide to the market when we look at saying through the poultry research that the USDA is doing or other universities are doing. When the next speaker talked, what does that mean for inclusion and blending rates that could take some of those peanuts off of the market over time? Something that's relatively new, but I don't think could be ignored, is the plant-based foods diet. The plant-based food diets, we're talking about $3 billion a year growth here. Total plant-based foods, you could see that there, $8.1 billion. 3.3 billion of that is actually, believe it or not, in the plant-based milk category, which almond milk controls about 60% of the plant-based milk market there. But when we go back, we talked about alternative markets earlier on, and we talked about the consumer demand and the consumer preferences there. The global peanut market is valued at $90 billion in 2023. That's going to grow to $109 billion by 2032. Where can this alternative plant-based foods, it's not going to just accelerate overnight, but I think it does have potential there, because what we're doing is we're seeing trends in the health and wellness, about health conscious consumers seeking nutritional snacks that foot the bill. That's driving the plant-based food market. We're also seeing increases from the consumer in sustainability. We're also seeing the needs of consumers that like versatile products. The adaptability of a market like peanuts to make peanut butter, peanut flour, peanut oil that can have health benefits, and it's very versatile so that consumers can integrate that into their diets. The interest in plant-based alternatives is evident. The plant-based food markets has increased about 29% in the U.S. between 2017 and 2019. And while it's difficult to pin down a particular number on this, I found this statistic, and I thought it was interesting. 8% of U.S. consumers say or identify that they're either vegetarian or follow a vegan diet as of last year. And you think about that combined with the fact of how much attention these plant-based foods are getting, and are some of these established markets in the European Union, for instance, are they looking to move toward this maybe at a faster rate than, say, consumers in the U.S. would do? Now, certainly new markets like this have its challenges, it has its concerns, the allergy concerns there. The industry's got to navigate stringent allergen labeling and food safety things. We've talked about that. The environmental impacts of this, price volatility, consumption trends. With new and emerging markets like this, they tend to be extremely volatile over time, but it does produce an opportunity for peanuts when you look at where those emerging markets are, the value of those markets, and what that could potentially mean. One of the last points I want to conclude on is the renewable diesel demand. There was an article published in Reuters yesterday morning, actually, and I thought it made some interesting points. It talked about where the U.S. was in terms of the sustainable aviation fuel. Jesse mentioned that earlier. That Reuters article said if it's sustainable aviation fuel, if all of the announced capacity were to come online over the next 5 years, sustainable aviation fuel consumption could jump by 1,000%. The EIA anticipates that domestic production of other biofuels, and this is where we see other biofuels, renewable gasoline, propane, heating oil, things like that, could increase by about 50% going over the next couple years. And EIA, or the Energy Information Agency of the U.S., projects that sustainable aviation fuel output could rise from 2,000 barrels a day to 30,000 barrels a day. Now, that's a lot to really unpack there, and I think that's by folks in the industry, but it does represent potential. And up to 2020, I'll call your attention to that line, that graph on the left. The renewable diesel production really was under 1 billion gallons a year. The potential growth, though, shows that industry growing to 7.5 billion gallons by 2025. Now, when you look at the graph on the right, historically, soybean oil has represented about a third of the value, of that. The oil content of the beans that are growing to crush. Can peanuts compete with that? And I think that's going to be an important question when you look at efforts that are done by partners like Chevron, Texas A&M University, developing that diesel nut. And a lot of this is going to be rooted in federal policy for this. The diesel fuel, the diesel nut, peanuts have tremendous potential to produce over 100 gallons of biofuel per acre, right, compared to canola or soybeans. But the enterprise budgets, the production cost of peanuts, are we growing productions in a different system? Is there going to be a yield reduction? How willing are producers to devote a large percent of their acres or small percent of their acres so that their crop could be profitable as a biofuel? Do we need to lower the level of management intensity that we need? And I think this comes through research. If the peanut can produce way more biofuel than canola or soybeans, then, do those new oil content varieties that are so much higher, 60% compared to say 48%, are they managed differently? And I think that's where the research by Texas A&M, by Chevron, can really come in and really can secure some pretty good and ample footing for the market going forward long term. So to conclude with and to revisit something, when we talk about ending stocks and stocks to use ratio, we talked about biofuels, we've talked about plant-based food markets, we've talked about peanut shells, we've talked about peanut oil, but it's so hard to say that this market is going to, if established, take away X tons off of the market. But we do have an indication when we look at the data and we look at that ending stocks number. If we take that 1.952 million pound number there, when we look at that and we say, okay, well, what if it's 150,000 pounds? What if it's 200,000 pounds from some of these markets over time? And we chart that out, we can estimate that we're going to tighten the peanut market, even if we use those assumptions by FAPRI, that, acreage may go up, it may go down every year. Under normal weather conditions, we're going to have ebbs and flows in peanut yield per acre, but it can be an indication of what that can mean to further tightening ending stocks for the market. And, while I can't sit here and say that if we take 150,000 pounds off the market, what's that going to do to price by 0.002 cents a pound or whatever it is, it can be an indication of where that market potential can at least be assessed from under the current supply and dynamic situation that we have. The last slide I have is something that is just increasing so much, not only from the peanut industry, but with rice industry, the soybean industry, what the cotton industry is doing. I know a lot of producers in that room produce a lot of these crops. The sustainability campaigns that these industry and these grower organizations are promoting is so important now to the consumer. We talk about how important and how efficient peanuts are because out of all the nuts, it uses 3.2 gallons to produce an ounce serving. You look at the metrics that the soybean, the cotton, the rice industry are using to denote the environmental stewardship of their land, the management intensity of their land, and the opportunity that can give their product at the shelf to the consumer. And I think these things can't be overlooked because we have the science now to evaluate this metric. And these metrics can go a long way to tout the peanut story or the production story of how this commodity was grown on the farm, with maybe getting a premium in the market, but maybe increasing the volume of sales to certain markets because our crop was produced in a sustainable manner. And the sustainability campaigns now are so very important through checkoff dollars and through the industry work. I can't thank the Peanut Commission enough for inviting me to speak to y'all. Again, we don't have a lot of peanuts in Louisiana, but it's one industry that we're seeing a lot of interest in. I want to thank Jesse. I want to thank Don. I want to thank David for their help with this virtual presentation this morning. Here's my contact information. There's my email and phone number. Please call anytime. I'll stay on the call if we want to do questions later, but can't thank y'all enough for the time and the opportunity to speak to your fine organization this morning. Thank y'all very much.